Okay, good evening. We are from Group 8. We're presenting on financial analysis for company. We chose construction industry. So our group member consists of myself, Bavani, Shalini, and Deepan. So we'll be presenting on three main companies that we chose under construction industry. So if you see for introduction part, the GDP for construction industry increased from 11 trillion in second quarter to 13 trillion in third quarter. Within that 4 months, there is huge increase, and 13 trillion is marked as one of the highest GDP for construction industry. So these are companies that we choose: Sunway Construction Berhad, IGM Corporation Berhad, and Gamuda Berhad. And one of the areas that we'll be covering is company overview, the stockholder analysis, return and risk and return, investment return, capital structure, dividend policy, and valuation of the company. Okay, for in overall the country's GDP for construction, construction only contributes about 9.573 trillion, which actually shows majority of the GDP of the nation comes from construction industry. This also proves that the construction industry currently is blooming and will be blooming in coming years as well. Okay, for the company overview, Sunway Construction was established in 1974. It has a market capitalization about about 13 billion, and its core business is all about the construction business, domestic and international, residential and commercial institutional projects. IGM Corporation was established in 1983, and it is a merger between IGB Construction, Juru Utama Sinar Berhad, and Muda Jaya Construction Sinar Berhad. And IGM Corporation's core business is basically their core is on construction, but they have other sectors also, which is industrial, plantation, and property infrastructure. Whereas Gamuda, established in 1976, till now, they have about 4,000 employees, and their core business is on infrastructure of urban and civil highways, local and internationally. They are also the largest water producer and with privatized water treatment. Okay, stockholder analysis. Okay, from here we can see that these are the list of main shareholders in each respective company. If you see in three companies, they have common shareholders, which is EPF in both IGM and Gamuda. They hold the major shareholding in both companies. Amanah Raya also major shareholders in both the companies, and Lembaga Tabung Haji also both in IGM and Gamuda. Okay, let's move on to risk. Risk and return of a company is calculated from this beta value. The higher the beta value, the riskier is the company. But ironically, higher beta value actually indicates a better return in terms of investment. If you can see, Sunway Construction has the higher beta value, which also means that it's supposed to generate more income in return. But from this you can see IGM has a better earnings with 21.7 ringgit, but it has a lower beta value. Maybe it also can conclude that they have more projects. Yeah, more projects have better earnings.
Okay, let's start. My name is Shalini. Okay, I'm explaining about the investment return. Okay, first will be the cash flow analysis, which is very important for every company. Okay, for the Sunway Construction, the cash flow will be for 2016 is 1.247 million, which is decreased compared to last in 2015. It is 1.292. This is due to the new project they are taken, and for the IGM will be also is decreasing compared to 2015. 2016 will be 1.423 million, and it's decreased to 1.637 million in 2015. For the Gamuda will be 1.444 million in 2016, and it's increased in 2016, and 2015 will be 79.234. This is due to the backlog. They have settled their backlog project and they get more profit for the company. Okay, higher ROI will be the more attractive for the investors. So the ROI for the Sunway Construction will be 27.65, which is the highest compared to 3 companies. The IGM ROI will be 4.33 and the Gamuda ROI is 5.71. So the investors will be basically see the ROI to invest into the company. So compared with these 3 companies, Sunway Construction is better than others too. So the ROE will be the 27.59 for Sunway Construction, and for IGM will be 6.44, and for Gamuda will be 9.48. So the ROE will be explain how they use their investment into their equities. So whether their equity is a balance to their investment or not. So compared to these 3 companies, Sunway Construction is better than others too. Okay, for Sunway Construction, the new project will be taken in 2017, and they are using a cash flow term for their daily operation. For the IGM will be the West Coast Express, and the second project will be New Deep Water Terminal, and the third will be MRT Line 2. For Gamuda will be Pan Boreo Highways. Second project will be upgrading work at SAE, and the third project will be the implementation of IBS, and fourth will be PDP for KV MRT Line 2. And these both company IGM and Gamuda are using their debt as their cash flow for their companies, and due to these 2 projects to go on, they need to borrow more money so that they can settle down their project as well. So moving to the next will be the capital structure. So the capital structure will be explain the debt ratio for the 3 companies. First, debt of equity for the Sunway will be 15.83, and for IGM will be 63.66, which is the most highest amongst these 3 companies, and Gamuda will be a 60.61. So the debt of equity, it shows how much debt they are utilizing to compare with their equities, which is increase in DE due to asset held for long-term use, example buildings. Increase in DE risk, shareholder invest or leading. And when DE increase, equity, the more expensive source of finance, is replaced by the debt, cheaper, is which leading to an increase in shareholder return. So debt is a cheaper source of finance compared to the equity. Increase in debt of equity level could benefit the company through a reduction in the cost of capital. So let me explain the debt of capital. For the Sunway will be 13.65, and IJM will be 38.9, and Gamuda will be 35.67. Among the 3, IGM is the highest, which is 38.9. Normally the investor will look at the debt of capital to invest into their company, because debt of capital will show how much debt they are utilizing for overcome their capitals, which is how much the company are financially stable in the market. So IGM is under the riskiest part, and the Sunway is in safe position. It's 13.65, which they are financially stable in the market. Let me explain the advantage and disadvantage of the debt. So the advantage part will be to retain control, as the lender has no say in how you manage your companies. The second advantage will be the amount you pay in interest in tax deductible. And the third advantage will be the easier planning, as the amount of principal and interest payable in identified early. So the disadvantage will be have good qualification in credit rating is required. And the second will be financial discipline to make repayment on time. And the third will be business asset to the potential risk control to the lenders. And moving to the next slide will be the dividend policy. And the dividend payout for the 2016 for 3 companies are shown here. For the dividend yield, Sunway Construction will be 2.66 and IGM will be 2.1 and Gamuda will be the 3. And the Gamuda have a highest dividend yield for the year of 2016, and this show how risky the company are. And dividend yield basically explain how much they are paying to their investors, and with the dividend yield the investor will be attracted with their company. So based on this analysis, IGM has the good dividend yield, which is 2.1, and the payout ratio for IGM and Gamuda is nil. However, Sunway Construction give a payout ratio which is 69.57 for their investors. And moving to the dividend, which is paid out by the company to the investors, based on this dividend the investors will be more attracted to invest into the companies. And Sunway Construction give 0.35 for per share, and IGM will be 0.07, which is the lowest among the threes, and the Gamuda will be the 0.12 cent. So based on this, Sunway Construction is the best dividend giver to the investors.
Okay. Hello, good evening. My name is Deepan, and today I'm going to touch on the valuation of companies. So I will focus on the 5 main aspects of valuation, which is market cap, target price, construction profit before tax, size and the margin, plus the construction backlog. So again, as you can see, market cap is basically the price of a company, whereby the total dollar value of a company's outstanding shares. So we can see that based on this, IGM has the biggest market capitalization, but about 12.6 billion. But then IGM is the group, but while the other two is more on construction, so the numbers might be a bit biased. So if you look on paper, IGM has the biggest market cap, but I think Gamuda has the most profitable or the most demanded market. We look at target price is basically the stock valuation at a trader's buying or selling price. So you can see here IGM also has the biggest target price with 7.3. The construction profit before tax size, Gamuda has the biggest, about 260 million ringgit, followed by IJM 184 and Sunway Construction by 151. And next, the margin, the construction profit margin before tax, Gamuda has 22% profit margin, which is the biggest, almost 3 times more than Sunway Constructions. So you can see that Gamuda has a very profitable income statement or balance sheet. Next, we go to the backlog of construction. We see IGM has a lot of construction backlog. This is quite bad because they might incur LEDs, or they might the price of materials might increase, might impact their income statement or their materials. But then one thing good about that is they can reserve a lot of money. The receivables will be high. That means the income will be staggered over a longer period. Meanwhile, Gamuda has almost no construction backlog, about 1.3 billion, compared to about 6 times less than IGM. But then, although they are on time, we are not sure whether they are going to have further business in the future. But based on our evaluation, they have a lot of upcoming projects, so it's good, it's safe. So based on all of this, we can see that Gamuda has the best valuation. Although on paper, IGM has the biggest numbers, but Gamuda has the most least construction backlog and highest profit margin. So to summarize our findings, you see that based on the 5 elements, risk and return, Sunway Construction has the highest risk, but they can obtain better rewards. Meanwhile, IJM is low risk, lesser rewards, while Gamuda is almost similar to Sunway, but Sunway is better in that sense. For investment returns, Sunway has the highest investment returns with a positive ROI, while IGM is positive but has the lowest ROI compared to all three. While Gamuda is in second place. Capital structure, as what my friend Shalini explained earlier, Sunway has a low debt ratio whereby they use their cash to finance their projects, while IGM has the highest debt ratio because they use more on loans and external debts. Gamuda is also the same like IGM. On dividend, Sunway has the most attractive and highest dividend payout, as informed again by Shalini earlier, while IGM has the lowest dividend payout, about 0.07 cents. So on valuation, all is okay, all has good valuation, but then Sunway Construction has the most increase, has the most highest growth compared to Gamuda. So what we can summarize is Sunway Construction has the best returns, or is the best stock for investors to invest compared to these three, as they have very good dividend policy, their capital structure is all internal, means they have very low debts, and their investment is very high, they have a positive ROI. So our group is suggesting that Sunway Construction has the best market value and shareholder and value for shareholders. So that is all.